Lucas Miller, thank you for coming on to the Capital Raisers show. I know a little bit about your background. I met you at the Raising Money Summit. You came up to me and told me that you had done a few syndication deals, which I was very impressed with. You seemed very humble. And then when you told me, hey, I've done about 520 units, I was a little like taken aback, but that's really cool. So you have a podcast as well. It's called the Fear Free. No, Fear Free
Yeah,
Passive Investing, right?
you got it.
All right. So tell us a little bit about how you got involved in multifamily syndication, a little bit about your background for people who don't know you.
Yeah, Ruben, thanks. I really appreciate coming on and being able to share my story. And you got a great show here, so I really appreciate that. But I got started in a couple of years ago, and I got partnered up with someone through my work connection. I had a 9-to-5 job at the time, and he was a young guy, and he was essentially doing what I'm doing now. And he was this young guy, and he was just killing it, doing a bunch of deals. And, you know, I kind of just side asked him, hey, what are you doing? Like, how does this work? Like, are you coming from tons of money? And, you know, are you super rich that I don't know about? Like, we were good friends. And so, he essentially told me that he raises money from investors and he buys big apartment buildings with them. And I thought, wow, that's really cool. I was doing single family flips and small rentals at the time. And that really caught my attention. Like, hey, you can scale with other people's money. And that's awesome. So I worked on that for a little while, just kind of researching, learning as much as I could, and really spun my wheels for a long time and didn't get anywhere, which was really frustrating. And I was trying to do everything myself. And I don't know if you've ever experienced that, where you just feel like you have to take on all of this stuff by yourself, and capital raising, finding a deal, sourcing a deal, dealing with lenders, dealing with insurance brokers, all this stuff that goes into a syndication. You're trying to do it yourself, and it's so difficult. And then eventually I met my partner and mentor at a conference last year, and he was like, well, you don't have to do it all yourself. And that was just kind of a eye-opening experience for me. And fast forward to today, 520 units, and we got another project under contract that'll close by the end of the year. So hopefully that unit count goes up, knock on wood. But yeah, they are all great deals too. I'm really excited for them.
I'd love to hear more about your mentor. Who taught you how to do this business?
Yeah, Mark Kenny with Think Multifamily, and Mark's got, you know, thousands of units at this point, thousands. He's really dialed it into a system to where the biggest problem I was having was finding deals, you know, access to deals. And for anybody who's struggling in this business knows you have to have track record to get those good deals. When you're able to leverage a name like Mark Kenny, doors open up for themselves, and you really get access to awesome stuff. So, you know, I owe everything to that man and my success. So he's a great person.
That's right. I think I saw you in front of his booth originally at the event. Okay.
Yeah, I'm helping him doing some volunteer stuff, but yeah.
Okay, so I think a lot of people are in that situation where they're doing things by themselves. I was with a partner originally doing small flips back during the crash, multifamily flips, fourplex, 12plex, et cetera, et cetera. We went our own ways, and because that was the model I knew, I wanted to buy a bunch of fourplexes by myself, and I was just paralyzed. I couldn't figure out how to do it. I couldn't raise the capital without a partner to edify on my videos and raise capital on social media and whatnot. But then here you are with a very similar situation, and you come across somebody, and it's hard to grasp the concept, right? Because you're thinking small, and then somebody says, well, instead of doing, you know, fourplexes over and over until you get 32, why don't you just buy them all right off the bat, you know? And you're like, what? I mean, I can't even conceive of that. So my story is similar, and I think people, one of the best ways that they can get into this business, because it is a team sport, is to collaborate with somebody that's already in. Like you said, you can't do it without a track record.
Right.
So tell us about your first deal. How did you come up with the concept? Did you find the deal? What was your role in the business?
Yeah. I mean, that frankly, you can't do anything without a track record. Frankly, you can't get loans pretty much. So you have to partner with someone to get started. And that's exactly how I came into my first deal. The first deal was 384 units in Memphis, Tennessee. I did not find it. The only thing that I did is a little bit of due diligence stuff, a little bit of research, and raising capital. That's really where I came in. So was immediately ushered in and was able to quickly realize my strengths and weaknesses in raising capital. And really that was an eye-opening experience. I didn't raise nearly as much as I thought I would, which was frankly a gut punch. I thought that was not going to be a problem for me. And when you go to actually call that capital due, you find out, who's being real with you and who's not. So that was a great experience, and that closed in early April. And the partnerships that I made on that deal immediately ushered me into the next deal, which was in Atlanta, and that was a good one too.
So how much money did you think that you would be able to raise, and how much did you actually raise?
Oh man, I thought I was going to raise like 700K easy. And at the end of the day, it was a little over 200. And that was frankly due to a lot of, timing is everything, right? And so you have these folks that are committed and they say they're committed, and then you say, okay, here's the wiring instructions. And that's when the excuses start coming up. So I learned a lot on that, but it is what it is.
So where did you end up getting the money? Did you feel like you had a lot of previous relationships from your fix and flip business that would invest, and then they didn't?
That was my theory, right? Like you have all these folks that have lent you money before, or at least knew that you were investing, and you had some sort of successful track record, and it just kind of fell through. And a lot of my contacts that I was approaching were from a previous job, a 9-to-5 job, and they all knew I was investing. They all knew that I was jumping ship to start doing big multifamily stuff. And, I still keep in touch today, but I don't think any single one of them has invested in a deal yet so far. So that just goes to show you like how way off I was on that.
So what kind of objections were they presenting you?
Oh, I mean, and certainly they were legitimate. Like one gentleman who is probably high net worth, ultra high net worth. He was buying a business at that time, and so he needed to come up with like $2 million cash in a couple of days. So he was out. A couple other people said timing's just not right, or they couldn't get their money moved over quick enough. One person had a death in their family, so that was, and he was going to be paying for it, so that was legitimate. All these things that certainly are true, but it gave me a very real understanding that you always need to have more money in your pipeline. You can't just rely on the people that you already know. You always got to be out there, and that's got to be top of mind for you.
So Lucas, is it okay to talk about the pay structure for raising capital in your deal, or is it sometimes you don't want to talk too much legalities? But I'm curious, how did you set that up?
Briefly, I mean, just from a high level perspective, it was certainly not pay for performance or anything like that. It was a general partnership structure from the get-go, where I had other duties, I had other things that I was doing in the deals, and I had an expectation of how much money I would be bringing in, and it was essentially that I had shares of a GP or percentage of that dedicated to raising capital, and someone had to fill in for my spot, so they got a little more from that. So it was a 70-30 equity split, and I think 30% of the GP was reserved for capital raising, so fairly standard stuff.
Okay, yeah, because I think a lot of people, when they're getting into syndication, that's one of the things that they're most curious about, because they don't want to raise capital incorrectly and then get in trouble for it.
Yeah.
So that's fascinating. What would you recommend for somebody that's trying to negotiate what they can get in terms of a GP when they're first starting out?
Well, when you're first starting out, I'm of that mindset that you shouldn't be negotiating with who is doing you a favor essentially into a deal. if you are adding value to their job and easier, they'll take care of you. At least the person that I know in this business will take care of you. But you shouldn't be expecting to come in and negotiate something that, frankly, you haven't earned. Now, once you get a track record of, hey, I can raise X amount of dollars on a regular basis, that's when you can start to negotiate a little bit. Um, but for my first deal, I was just concerned with how can I help these people get this deal closed? Because frankly, the deal is more important than my
Yeah.
portion of it. I want a good deal for my investors. If I, as a GP, didn't make a dime on this, I was okay if that meant that my investors' money was going to be safe. And so that, for someone starting out, you should have that perspective of just take care of your investors first and then worry about yourself, but don't work for free. Obviously, you should always be compensated for the work you're doing too, but focus on adding value and helping people first, and then worry about yourself down the road.
So walk us through the process. You get into your second deal, you start getting a little better at raising capital. What kind of strategies did you implement in order to raise the money for the second deal?
Yeah. So to come off of that, frankly, it was like a gut punch. Like I said, like I thought I would be a lot better. And so one of the things that I took away from that deal was that I need to fill up that pipeline a lot better. And from there, I actually started my podcast. So as a way to frankly find out how investors are thinking. Like you said, it's called fear-free passive investing. And the idea behind it was that I was interviewing all these past new the passive investors on how they got over their fear, like asking them questions, what would you want to hear from someone like a sponsor like myself, and figured, hey, this is, decent content. Maybe I should record it and put it on a podcast for folks. And so that's ended up what happened. And that is one source of legitimacy, I guess you could call it, as a sponsor, is I've tapped into the brains of a few passive investors on what they want to hear and what they're looking for from the sponsorship. But really my strategy thus far has been something that I like to call like in-person, like guerrilla marketing and networking. And all I mean by that is just I'm in constant networking mode, as far as I want to be at tons of events every week and every month. I go to quite a few events, at least one a week, if not two. And a lot of them lately, I've been trying to push for more non-real estate events, which everybody goes to real estate events, right? Like, but I think a strategy that's worked really well for me in the past is being the only real estate person in the room. And so that's really what I've been trying to do lately. And over the past 2 or 3 weeks, it's turned out pretty well, actually. I've gotten several really great leads from folks, and now it's just converting those. But being on the ground face to face has been my biggest, I guess, the biggest help to my business. But I also do I have a decent website. I do, a regular newsletter. I'm trying to stay top of mind to those folks, but I also need to grow that network too.
Yeah. So, and then when you were branding yourself and creating your marketing material and your website, how did you create all of that? Did you outsource it? Did you hire some people to do it?
No,
You did it all yourself?
that was probably one of my bigger mistakes, is I knew nothing of WordPress. I don't have a computer science background. So I went from zero to, WordPress, which isn't that difficult, but it took a long time to learn.
Mm-hmm.
And I wasted a bunch of time when I could have been out there like networking with people or analyzing deals. So that my advice to people is, if you can afford it, definitely outsource that from the get-go. It's not worth your time to do that.
And then for your podcast, how long have you been doing that? Tell us a little bit more about your show.
Yeah, I've been doing those interviews since late February, I think, right around there. And it's just basically a conversation just like this, asking people, hey, how did you get over the fear of wiring $50,000, $75,000, $100,000 to someone you don't know a whole lot? And really trying to tap into how they address their fear. Because at the end of the day, if someone decides not to invest, yeah, they might have a legitimate excuse, but they also might just be scared. It's a scary thing. I've done it. I've passively invested in a deal, and it's scary. And so I really wanted to find out how they got over that. And a lot of people and it's almost a resounding theme at this point. I could stop the podcast now and just say, hey, go educate yourself. But really, the light switch turned on for a lot of people, probably 90+% of my guests saying, once I dug in and started educating myself about it, I realized that it was a no-brainer, and went ahead and pulled the trigger. So for anyone who's on the fence about investing, just educate yourself a little more, and you'll feel a little more comfortable.
And what about from the multifamily syndicator perspective? So a lot of people that are in syndication space, they want to start a podcast to get an audience, because you hear these stories of like the Jake and Ginos and the Whitney Sewells
Yeah.
who have these massive databases, even like Adam Adams. They essentially can raise all of their money for their deals right from their people that listen in on their show. Are
Yeah.
you trying to do it that way, or are you more just adding value to the space without really worrying about what happens as a result?
Yeah, I mean, that'd be nice, right? Like, just make one phone call and have all your money raised. But no, that I mean, sure, that would be a great goal to have. It's not something I'm actively pursuing right now, just because I don't have the resources or the bandwidth to do it. Um, for me, it was more, I wanted to have yet another resource that investors could look to, and essentially help them. Like, I think of it as like a stair step, right? You're right here as far as you know nothing about syndication. All the way up here is wiring that money. If you can create little stepping stones to help people up to that wire, you're good. So that's just another step in my stepping stone of, I have like a blog post, I have all kinds of guides and videos and other content, hopefully just helping them get to where they want to be. And if it turns into something where I can raise millions of dollars, great. If not, I'm not, I'm going to do it no matter what. So, podcast or not.
Okay, so you do your first deal, you raise a little bit of money, you do your second deal, you start getting a little bit better.
Yeah.
At some point down here, you start to feel like you're creating some value in terms of the capital raising
Yep.
portion of your business. And I'd love to hear if you started to approach your sponsors, your partners, to see if you could get a bigger piece of the GP and how that conversation went.
Yeah. I think, on this latest deal, I've certainly expanded what I've been doing. And once you have an idea of how much you can raise, on a regular basis, that's when the conversation can change. Because on the sponsor side, the last thing you want to be doing is begging people for money to close the deal. That's a sign of desperation. To me, that's like a huge red flag. So you really got to be confident in your partner's ability to raise that money. And so I feel very confident that I can raise at least a smaller number, but I obviously can shoot for something much higher too. And I haven't really negotiated like, hey, I'm gonna bring this amount in. However, I've been talking with some other equity groups that might be interested in bringing the totality of the equity. And for that, I've definitely started a negotiation of like, what would that look like from my perspective, getting paid for bringing in all this equity? Because in my networking, I meet a ton of people that say, oh, I know a bunch of people. How would that work as far as, and what it ultimately is, it's a sub syndication. And so, I've been working with a couple different people to figure out what that would look like. But, we'll see. I'm still focused on adding value first and making sure the deals close and that they're good deals. Beyond that, once I feel like I'm confident enough to make the rules, that's when I'll really start pushing it.
So I had Neil Bawa on, and he said that he was overpaying for deals. Do you feel like you guys, when you're looking at deals, are having to pay a premium to get into these deals because of the amount that are not really available?
Yeah, yes and no. I know where Neil's coming from. He and I definitely share a similar viewpoint on the ongoing view of cap rates and commercial real estate in general, as far as global economics. But we're not overpaying for deals. That's still silly. Everything we buy cash flows. Everything we buy will continue to cash flow throughout. We're not speculating on any future valuations other than cap rate reversions. In fact, we're pretty aggressive with our cap rate reversions as far as predicting future values being less than what we're buying today. But we're not also going into banner markets. We closed a deal in Atlanta earlier this year, but that was almost a fluke. Like you could say, we got in at such a low cost basis that we felt really confident in that deal. And it turned out to just get even better the further we went into it. But we're not buying in Denver or, Salt Lake City like Neil is. We're buying in good cash flowing, affordable secondary markets in the Southeast. So that brings a lot of confidence with it, but we're not overpaying.
So the guy that you spoke to originally that was purchasing multifamily property when you were still flipping houses, do you find that the roles have reversed a little bit and now people are asking you, hey, wait, I mean, just like a few years ago you were flipping houses and now you're I don't even understand what you're doing. Can you explain it to, how often do you have that conversation?
Pretty often, actually. And actually yesterday I was having coffee with a title rep, and he was like, hey, do you know this person that I initially talked to? And I was like, yeah, I know him. I talked to him years ago. And he was like, oh, well, we're doing his deals now. And I was like, we're doing the same deals. We're probably competing. If I was looking in the market that he's looking in, we would probably compete on these deals because we're looking for the same stuff. So it's really funny to see how everything comes full circle. But yeah, we have that conversation pretty regularly. But now it's like mainstream, right? Syndication there's so many resources to learn it that it's much easier now.
Are you a little nervous that there's a lot of people coming into the multifamily syndication space because there are so many educational platforms around that?
No, not at all. There's so many. I mean, it's just like flipping or, house hacking, no matter what it is, whatever the investing du jour is. There's probably 80%, following the Pareto theory, there's probably 80% who are all talk that are never going to do a deal, that will say they're going to do a deal. And then there's 20% that are actually doing deals. I feel very confident that we can compete within that 20% mark. And just talking with brokers when you're doing deals, like you're competing against pretty much the same people on every single deal. There's no big new groups people are coming in where, hey, this is a new group, they're buying this $100 million deal, or it really boils down to track record, and there's only a few people with that track record in the space, relatively, that I'm not worried about competition at all.
Tell us a little bit about the Think Multifamily program with Mark and Tamil. How is that going for you? Are you still a student of it? Or do you participate in other ways? Tell us about how that was going through that and getting into your first syndication deal from that perspective.
Yeah. I mean, it's not for everyone, right? Like everyone, it has this big hang up on paying for education. And for me, it wasn't about paying for education. It was paying for access. And you think about, like, you pay for a college degree to have access to new opportunities to get a job. That's the way I looked at it. And from that regard, it's a bargain, right? Like, so I felt very confident about my education going into it. And of course, I've learned so much more, but it was more for the access to deals. And obviously, it's not going to work the same for everyone as it does for me. But I'm very confident that if you choose an education platform, and there's plenty of them out there, right, you're going to have success if you put in the work that they tell you to put in. So that's really what Mark harps on is, he'll go as far as to guarantee it. I would never guarantee it, but he'll go as far as to guarantee that if you do everything he tells you to do, you'll get into a syndication within 6 months. So that tells you his level of confidence, our level of deal flow, which we have tons of deals going in that group right now, more than you can raise capital for. Like if you're interested in that, you got to get teamed up with some people that you really feel confident in their morals, their ethics, the deal sponsorship, the underwriting. You got to feel confident in that. But once you do, there's more deals right now than I can raise money for, frankly.
What about, I'm curious, So when you were flipping houses, afterwards, you start a podcast, which is scary, and now you're going on stage in front of people, which is scary. Tell us about the emotions that you went through in both of those.
Yeah, it's really scary putting yourself out there, right? Like, you know, that experience.
Mhm.
But at the end of the day, I really don't care what people think about, uh, because I'm happy with the direction I'm going, and that's been tough to understand for myself. Like, I still get nervous talking to people, or get worried about what people are thinking about me. But at the end of the day, I know what I'm doing makes me happy, and probably 90% of the people in the audience would kill for that, right? So putting yourself out there is always going to be scary no matter what. But the more you do it, the more you gain confidence. And I'm not going up and pretending I'm some expert, right? I'm just going up and sharing my experience. So from that regard, I can't be wrong, right? Like, I'm not getting up there teaching rocket science. I'm getting up there just sharing what I've been through. From there, it's easy.
Yeah, that's good stuff, man. It's been pretty scary for me for sure. I think at first I was more concerned about how I sounded, and what I was gonna look
Yeah.
like versus just trying to have a conversation with people. And once I just let go of that, I think it became a lot easier for me to have conversation. But yeah, man, my goal is the same.
Yeah.
I'd love to be on stage in a year or two, sharing what I've done.
Yeah, and just going back to that, like, I think one of the biggest motivators to me to get up and talk to people is nobody remembers, nobody cares what you look like. Like, I had the same thought, like, oh, I got to make sure my backdrop is perfect when I'm filming a video, or I got to make sure it's polished, and nobody cares. Like, everybody's so focused on themselves that they're not focused on the small details like you would, and from there, that you get a lot of confidence from that.
So how big do you want to grow your business, your multifamily syndication business?
Yeah, that's a good question. I think for right now, I'm just focused on getting through the next couple years of finding really good deals and placing investor money, and making them happy. And then once those deals start to mature over the next, 3, 4 years, really focus on if we want to then scale it at the end of that, or just continue down the road we're going at. A lot of that's going to depend on the economic landscape. A lot of that's going to depend on what multifamily looks like in 3, 4 years. So for right now, the goal is just to continue what I'm doing, buying, 3 or 4 really good deals a year, and focusing on just making those investors happy.
So what happens if you're not able to find a deal? Are you prepared? Are you able to survive through everything?
Yeah, that's the whole idea, right? You never want to depend on finding the next deal. That's why I got out of flipping, right? The beauty of this is to create some sort of stabilized cash flow to where you don't have to find a deal to make things work. And that's the last thing an investor wants to hear, is that you have to get this deal done to get paid. They never want to hear that. So um, I find a lot of solace in that.
So since you've been in the multifamily syndication space, you come from a flipping space, so you probably still know a lot of people in the flipping space, and they're still
Yeah.
flipping, right?
Yeah.
What's your conversation like with those people?
Well, I'm trying to get them to be investors, right?
Right.
So,
What are they saying?
um, a lot of them, especially flippers, all I have to say is, like, do you want to reduce your tax burden? And that immediately starts the conversation. A lot of, I shouldn't say a lot. A few of them are weary of syndication just because they see it as like this new thing that everybody's doing, and they're nervous about the economic landscape, and it's all based in fear, right? Like we talked about. So that conversation goes a little differently after a few deals. On the first deal, it was really hard, but now it's like, oh, you can deduct X amount of dollars from your taxable income, active income, if you invest in the syndication that's taking advantage of depreciation. That changes the conversation a little bit. They Flippers are a different breed, and so they can't understand why you would take a smaller paycheck right now for stable cash flow. Like, they don't understand that. They want to have their $20,000, $30,000 per deal and move on. They want that high income. So this is something they don't necessarily understand, but once you have that tax conversation, it changes a little bit.
Very cool, man. Why don't you tell the audience how to get a hold of you and a little bit about Bannock Capital?
Yeah. So Bannock Capital is, I came up with that name because that was where we bought our first rental property. It was on Bannock Street in Denver. And yeah, so from there, it's bannockcapital.com. And my email is lucas@bannockcapital.com, BANNOCK. And I've got a ton of stuff, but my podcast is really where you can start to tap into where these investors are thinking about and how you can raise capital a little better. And that's fear-free passive investing. And you can find that on fearfreepassive.com, or, it's on all the platforms. So I'd encourage, if you do want to take capital raising seriously, dive into what previous passive investors are thinking about now. Because chances are, if they've gone through a good deal, they're hooked, right? But it's getting that first initial investment from those folks that is the tough one.
Cool, man. It's been great having you on the show. Actually, you're in Denver, right?
Right. Yep.
Okay, I'm going to be in Denver next week. If you want to grab a beer or coffee,
absolutely.
That'd be cool.
Bring your coat. We got snow last night for the
really?
second. It snowed twice already. So yeah. But yeah, absolutely.
Are you a skier or a snowboarder?
No, I did when I was little. I'm actually from Colorado, and I'm probably the worst Coloradan in that respect. I don't ski, I don't snowboard. I hate going up to the mountains in the wintertime because the traffic is miserable, and I just don't enjoy it that much. So I don't care.
All right, cool, man. Well, I'll be there next week. Hopefully, cool. just for a few days, maybe we can hook up. But thank you so much for coming on the show. I look forward to watching you progress, and hopefully we can touch base at the next conference.
Yeah, and looking forward to watching the video and watching the future ones. This is a great show and a really good idea.
Thank you, man. All right, dude. Take care. It's been great.
All right, see you. Bye.
Take care.